welcome to the deep dive. You guys have sent in some really fascinating reports and analysis. This batch is focused on India's economic outlook for 2025.
Yeah, that's a pretty juicy one.
It is. It's from Citrus Advisors. Have you heard of them?
Oh, yeah, they're a well-respected investment advisory firm based in India.
Yeah, so they really know their stuff. So we're going to be diving deep into their predictions, kind of dissecting their reports and giving you the key insights. It's all about what trends, predictions, and maybe even opportunities are out there. For anyone who's interested in India's economic future, specifically in 2025.
Right, and I think what makes this deep dive so interesting is, they go beyond just the numbers. They talk about potential policy changes, global events. They even bring up this massive religious gathering that's happening in India in 2025.
Yeah, we've got a lot to unpack here. Inflation, rate cuts, this whole idea of a consumption revival, and then, yeah, you mentioned the Mahakumbh. I have to admit, I'm really curious about that. But let's back up a bit. First, set the stage with a quick recap of what happened in 2024, because that kind of lays the groundwork for where things are headed.
Right. Well, Citrus Advisors highlighted a few key events that really shaped the landscape last year. One big one was the NDA government getting reelected.
Ah, the elections. Everyone was watching that.
Exactly. But they actually got reelected with a smaller majority this time around. So what do you think? What are the implications of that?
Well, I'm thinking a smaller majority might make it tougher for them to push through major reforms or policies.
Right.
Like they might face more opposition or have to make more compromises.
That's a really good point. And it'll be especially interesting to see how this plays out, with those assembly elections coming up in Delhi and Bihar.
Right. Those could definitely shake things up on the national level, too.
For sure. Now, switching gears to the economic front, there were some interesting trends in the stock market in 2024. We saw some FIIs, those are foreign institutional investors, they were pulling out some of their investments.
Oh, interesting. So some foreign investors were getting a little bit, I don't know, nervous, maybe?
Perhaps. But here's the thing. Domestic investors, and mutual funds in particular, they actually stepped in to fill that gap.
Oh, so it's like even though some foreign investors were pulling back, domestic investors were showing a lot of confidence in India's economy.
Precisely. And that's a theme we're going to be revisiting later in this deep dive. But sticking with 2024, remember how the U.S. started cutting interest rates?
Yeah, that was a big deal.
Well, India didn't follow suit right away. But the RBI, India's central bank, did take steps to inject more liquidity into the system.
Okay, how did they do that?
They cut something called the cash reserve ratio, or CRR.
The CRR. Now remind me, what's that again?
It's basically the percentage of deposits that banks are required to keep with the RBI. So by lowering that requirement, they freed up more money for banks to lend out, which could stimulate the economy.
Gotcha. It's like loosening the reins a bit to encourage more economic activity. Makes sense.
Right. And speaking of stimulating the economy, Citrus Advisors spend a good chunk of their report analyzing the outlook for consumption in 2025. Will people be spending more or tightening their belts?
Right, because, even though we saw some positive signs in 2024, rising inflation has been, putting a real squeeze on people's purchasing power, especially in urban areas.
True, but Citrus Advisors think there are some green shoots of a recovery, especially in rural markets. They actually cite reports from FMCG companies, the ones that make everyday consumer goods, showing signs that demand is picking up in rural areas.
Okay, so there's some hope for a rebound in rural consumption. But what about urban areas where inflation seems to be hitting harder?
Well, Citrus Advisors believe a few things could drive a rebound there, too. First, they expect inflation to ease up a bit in 2025, which would give consumers more breathing room, right?
Like less pressure on their wallets.
Exactly. Second, they anticipate some wage growth, which would put more money in people's pockets. And then finally, they see the government's focus on infrastructure development as a positive sign.
Okay, I see the connection there. Infrastructure projects create jobs, which could boost spending.
Precisely. But here's the thing. Citrus Advisors also bring up this really interesting, unexpected factor that could boost consumption in 2025. It's where the Mahakumbh comes in.
Ah, yes, the Mahakumbh. Now, for our listeners who might not be familiar with this, could you explain what it is?
Sure. It's this massive Hindu pilgrimage. Happens every few years at different locations in India. And in 2025, it's taking place in Prayagraj, a city in Uttar Pradesh.
Okay, so it's a huge religious gathering. But why are we talking about this in an economic context?
Well, get this. Citrus Advisors point out that this event is expected to attract a staggering 40 crore pilgrims.
Wait, 40 crore? That's 400 million people.
Exactly. Imagine the economic impact of that many people traveling, staying in hotels, eating at restaurants, buying all sorts of goods and services.
It's like a mega festival, but on a scale I can't even comprehend.
It's mind-blowing. And think about the demand for everything: transportation, accommodation, food, sanitation, security. The list goes on.
So the Mahakumbh could benefit sectors way beyond just tourism and hospitality. It could even create opportunities in areas like logistics, fintech, maybe even healthcare.
Precisely. And Citrus advisors point out that the government has allocated a pretty hefty budget for this event, over RSS 6,382 crore.
Wow, that's a lot of money.
And they estimate that the event could generate revenue of, get this, RS 25,000 crore for the state of Uttar Pradesh.
So it's safe to say that the Mahakumbh is more than just a religious event. It's a major economic force to be reckoned with. It's a great example of how things that might seem unrelated can have huge ripple effects across the economy. Now, moving beyond the Mahakumbh, what are some of the other key factors that Citrus advisors highlight for 2025?
Well, government policy and politics are always a big deal, of course, but 2025 is especially important because it's a budget year.
Ah, the budget, always a nail-biter. What are investors looking for?
They want to see what the government's priorities are, in terms of spending and reforms. Are they focusing on infrastructure, manufacturing, social welfare programs? All of that will impact specific sectors and the overall investment climate.
Right, the budget kind of sets the tone for the year.
Exactly. Plus, with those state elections happening in Delhi and Bihar, the political landscape could get pretty interesting.
For sure. And then, on top of all that, there's a global landscape to consider. Citrus advisors highlight the U.S. and China as two major players that could influence India's economic outlook in 2025.
Right. They're like the elephants in the room. Their actions have a huge impact, even from afar.
So let's unpack that a bit. What's happening in the U.S. and China that could impact India specifically?
Well, in the U.S., we've got a new administration in place, and their policies, particularly on trade, could have significant implications for Indian businesses.
Ah, trade wars. Everyone's worried about those.
Yeah, for good reason. For example, if the U.S. raises tariffs on certain goods imported from India, that could hurt Indian exporters, right?
So anyone who's thinking about investing in India, they need to keep a close eye on U.S. trade policy. What about China? What's the situation there?
Well, Citrus advisors are predicting a slowdown in China's economic growth in 2025. They also point to some persistent deflationary pressures in China.
Deflation, huh? That sounds a little bit ominous.
It can be. It basically means that prices are either staying flat or even decreasing. It can be a sign of weakening demand.
So how could China's slowdown in deflation affect India?
Well, it's a mixed bag, to be honest. On one hand, if China's demand for goods and services weakens, that could hurt Indian businesses that export to China.
Right. Less demand from a major trading partner? That's not good.
But here's the other side of the coin. India could benefit from something called the China Plus One strategy.
China Plus One. I like the sound of that. What is it exactly?
It's basically the idea that many global companies are looking to diversify their supply chains away from relying solely on China. Not putting all their eggs in one basket, so to speak.
Right, spreading the risk.
Exactly. And India, with its large workforce, growing manufacturing sector, and relatively low labor costs, is seen as a very attractive alternative.
Ah, so the plus one.
Exactly. So the China Plus One strategy could actually create a lot of opportunities for India, particularly in sectors like manufacturing and textiles.
So it's like every cloud has a silver lining. Even if China's economy slows down, India could benefit in some ways. But still, it's definitely a complex landscape to navigate.
Absolutely. And we haven't even touched on the world at war yet. Remember that section of the Citrus Advisors report?
Oh yeah, the conflicts? They didn't sugarcoat that, did they?
Not at all.
Right.
They really emphasized how these ongoing global conflicts can impact India's economy.
And they listed several conflict zones, right? Ukraine, the Middle East, the Korean Peninsula. They even mentioned some tensions between China and its neighbors. It's a stark reminder that these geopolitical events, they have a direct impact on economies, even those that aren't directly involved in the fighting.
And India, they have this really delicate balancing act to manage. They want to maintain friendly relations with multiple sides in many of these conflicts.
Yeah, playing the diplomat.
Exactly. But that makes it tricky because, taking sides could jeopardize valuable trade ties and disrupt supply chains.
It's like walking a tightrope, right?
Totally. And then you've got commodity prices fluctuating wildly because of these
Oh,
conflicts.
yeah, that adds another layer of complexity. It
Mhm.
affects everything from consumer spending to manufacturing costs.
It's all connected. So we've got a lot on our plate here. Domestic politics, global events, commodity price swings, and this fascinating Mahakum event that seems to touch on so many different sectors.
Where do we even begin?
Well, let's start by digging into those commodity insights that Citrus Advisors provide. We'll look at everything from wheat and sugar to crude oil and gold, break down the trends and what it all means for you.
Sounds good to me. Let's dive into those commodities.
All right, so we're back, ready to dig into those commodity insights?
Absolutely. Commodities are kind of the backbone of any economy, right?
Yeah.
Especially in a country like India, which is such a major producer of, well, pretty much everything.
You're not wrong, and that's why Citrus Advisors break down their analysis by commodity type. They look at agricultural commodities, energy, precious metals, the whole shebang.
So where do we start?
Let's kick things off with agricultural commodities, specifically wheat and sugar. India is a huge agricultural powerhouse, so these prices can really impact the overall economy.
Yeah, no kidding. So what's the outlook for wheat? I remember we talked about the government increasing the minimum support price, or MSP, for wheat.
Right. Well, that's expected to keep those domestic wheat prices pretty stable, but globally, wheat prices are actually projected to decline in 2025, which could be interesting, for Indian farmers and exporters.
Yeah, it's a bit of a tightrope walk, right? Trying to support domestic farmers while also staying competitive on the global market. What about sugar? What's the word on the street?
Citrus Advisors are actually anticipating some price pressures on sugar in 2025.
Oh, really? Why is that?
They cite a couple of factors like rising global demand and potential supply constraints, due to weather patterns and production issues in some of those major sugar-producing countries.
Ah, so it's a supply and demand thing. Makes sense.
Mm.
Okay, so those are the agricultural commodities. What about energy? I'm guessing crude oil is the big one here.
You guessed it. Crude oil and thermal coal are the key players, according to Citrus Advisors, and they're predicting that prices for both of them could rise in 2025.
Oh, no. Higher energy prices. Nobody wants that.
I know, right? It's partly due to those ongoing geopolitical tensions we talked about earlier. All that uncertainty around global supply, those conflicts, they're having a real impact on energy markets.
Yeah. Can't escape those ripple effects.
Yeah.
So higher energy prices, that means upward pressure on inflation in India, right?
Definitely something for the RBI to consider when they're deciding whether or not to cut interest rates. Okay, moving on to precious metals, gold and silver. Always a hot topic.
What's the outlook there?
This might surprise you, but Citrus Advisors are actually forecasting that gold and silver prices might stabilize or even decline a bit in 2025.
Interesting. Why do they think that?
They've got a few reasons. The potential for a stronger U.S. dollar, for one, which, tends to put downward pressure on gold prices. They also mention that if global economic growth slows down, which some analysts are predicting, that could also reduce demand for precious metals.
So if you're thinking about investing in gold or silver, maybe wait and see how things shake out in the first half of 2025. Good advice. Now, on to the industrial metals. Let's start with the ferrous metals, specifically steel and iron ore. What's cooking there?
They're expecting continued price pressures for both of those in 2025.
Price pressures meaning?
Meaning prices are likely to keep going up. They point to strong demand from industries like construction and infrastructure, especially in emerging markets like India. Plus, the ongoing energy crisis is, pushing up those production costs for steel, which could translate into higher prices for everyone.
So, not exactly good news for anyone building anything.
Mm-hmm.
Okay, last but not least, what about those non-ferrous metals? The aluminum, copper, zinc, and lead. What's the story there?
It's a bit of a mixed bag, to be honest. Demand for aluminum is expected to stay strong, driven by its use in industries like automotive and packaging.
So aluminum's looking good. What about the others?
Well, copper, zinc, and lead, they might face some price volatility. Influenced by things like global economic growth, supply chain issues, and of course those pesky geopolitical tensions, always lurking in the background.
Right, never a dull moment. Okay, so we've got a pretty comprehensive view of the commodity landscape for 2025. Some potential ups and downs, lots of things to keep an eye on. But I'm sensing a theme here: inflation, rising prices. Sounds like that's something investors really need to keep in mind.
Couldn't have said it better myself. Now, ready to shift gears a bit.
Always up for a new adventure. What's next on the agenda?
Well, Citrus Advisors highlight 5 key themes for 2025. They see these as areas with huge potential for investors.
Intriguing. So not just random trends, but really key areas to watch.
Exactly. And these themes are all interconnected, they paint a picture of where India's economy is headed in the bigger scheme of things.
Love it. Lay it on me. What's the first theme?
Unsurprisingly, it's AI and disruption. I mean, everybody's talking about artificial intelligence these days. And India, with its booming tech sector, is right in the thick of it.
AI, yeah, it's everywhere. But what specifically are Citrus Advisors saying about the opportunities in this space, for someone looking to invest?
They focus on what they call Gen AI, which is basically the latest and greatest in artificial intelligence technology. And they see use cases for Gen AI across a ton of different sectors.
Yeah.
Healthcare, banking, retail, high-tech, you name it.
It's like AI is infiltrating every aspect of our lives.
Mm-hmm.
But what does that mean for investors? Especially those looking at India's IT sector. I mean, aren't there concerns that automation could lead to job losses?
That's a fair point. And Citrus Advisors acknowledge that, yeah, some of those lower margin BPO services, business process outsourcing, those might be impacted. But overall, they believe India's IT companies are actually well positioned to benefit from this AI revolution.
So while some jobs might be lost, new opportunities will emerge in areas like AI development, data analytics, things like that.
Exactly. And they actually put a number on this opportunity. They estimate that Gen AI will create a global market worth, get this, $1.3 trillion.
$1.3 trillion. That's a whole lot of zeros.
It's a massive pie, and they believe Indian companies are ready to take a big bite.
Okay, AI, definitely a sector to watch.
Yeah.
What's theme number 2?
Manufacturing. This one's a classic, It's always been a key driver of economic growth.
Yeah, manufacturing, good old-fashioned making stuff. What's Citrus Advisors' take on India's manufacturing outlook for 2025?
They're actually quite bullish on it. They point out that India's manufacturing sector has been attracting a lot of foreign investment.
So Make in India is actually working.
Seems like it. They see a lot of potential, particularly in textiles and semiconductors.
The report mentioned that India's textile industry is on track to become a global leader by 2025. That's pretty ambitious. What makes them think that's possible?
Well, a few things. First off, global demand for textiles is increasing, and India is in a great position to meet that demand, with their large and skilled workforce. Plus, they've got competitive labor costs, which makes their textiles more affordable on the global market. And finally, there's this growing focus on sustainable and efficient production methods. India's making some good strides in that area.
Makes sense. So India, the next textile superpower. What about semiconductors? I know that's an area where India has been lagging behind a bit.
True, but Citrus Advisors point out that there's been a lot of investment in setting up semiconductor plants in India. The goal is to reduce their reliance on imports and build up their own domestic manufacturing ecosystem for these critical components.
Right, semiconductors, those tiny little chips that power everything these days. Smartphones, computers, cars, you name it.
Exactly. So if India can really get its semiconductor industry off the ground, that could be a game changer. Create jobs, boost technological innovation, and reduce their dependence on other countries.
Lots of potential there. So we've got AI and manufacturing humming along. What's theme number 3?
Renewable energy. This one's a no-brainer for a country with as much sunshine as India, right?
Yeah, harnessing the power of the sun. Always a good idea. What's Citrus Advisors' take on this sector?
They're highlighting the growth of India's renewable energy capacity, especially solar and wind power. They expect to see continued expansion in this sector, driven by both government support and private investment.
Now, remind me, what was India's goal in terms of getting their energy from renewable sources?
Well, by October of 2024, the renewable energy capacity, including things like hydro and nuclear, had already crossed 210 gigawatts.
Wow, that's impressive. So they're definitely making progress toward their clean energy goals.
All right, on to theme number 4, data centers. This one might seem a bit more niche, but it's actually super important in today's digital world. Right, data centers are kind of the unsung heroes of the digital age. And Citrus Advisors make a compelling case for why they're a huge growth opportunity for India. They point out that India actually has one of the lowest data center concentrations globally, which means there's a ton of room for expansion.
Now, wait a minute. Wouldn't more data centers just mean more energy consumption?
Yeah.
And weren't we just talking about how India is trying to reduce its reliance on fossil fuels?
That's a great point. And Citrus Advisors actually address that concern. They point out that India's booming renewable energy sector can provide that clean energy that's needed to power these data centers sustainably.
Ah, so it all ties together.
It does. Plus, with 5G, the Internet of Things, all of that, data consumption in India is exploding. So having more domestic data centers, that ensures that all this data can be stored and processed locally, improves efficiency, reduces latency.
Right, because if you're relying on data centers in other countries, all that data has to travel back and forth. Not very efficient. So it's all about building the infrastructure to support India's digital ambitions, but in a sustainable way. All right, on to the fifth and final theme, healthcare. This is a sector that's always in the spotlight, especially in a country with a population as large and diverse as India. What's the focus here?
Citrus Advisors are honing in on the private healthcare industry in India.
Okay, so not the government-run healthcare system.
Right. They see really strong fundamentals in the private sector, driven by things like increasing demand for quality healthcare, a growing middle class, and rising health insurance penetration.
Yeah, more and more people in India are able to afford private healthcare.
Exactly, and they're demanding better services and facilities. The report mentioned that hospitals actually account for the lion's share of healthcare spending.
So what's the outlook for hospitals? Should I be investing in those?
Well, Citrus Advisors believe that private hospitals are well positioned to benefit from this growing demand. They highlight factors like strong operating leverage, which means they can increase profits without a proportional increase in costs.
Sounds like a good business model.
Right. They also point to things like limited bed supply, meaning there's a shortage of hospital beds relative to the demand. That gives those existing hospitals some pricing power. And then they see a trend towards a more favorable payer mix, meaning more revenue is coming from insurance companies and less reliance on those out-of-pocket payments from patients. So that makes their revenue stream more stable and predictable.
So it sounds like a pretty positive outlook for healthcare. But of course, as with any investment, do your research and make sure you understand the industry. Always good advice. Okay, so we've covered those 5 key themes for 2025. But before we wrap up, let's zoom out a bit and consider the overall market outlook. Now, Citrus Advisors did mention a potential time correction, and that always makes investors a little bit nervous, right?
For sure. It's like that feeling when you're on a roller coaster and you know a big drop is coming.
Exactly. So can you explain what they mean by time correction and just how worried should we be?
Well, a time correction is essentially a period where the stock market takes a breather, after a period of strong growth. It's not necessarily a crash, but more like a sideways movement, a little bit of a pullback in prices. It's a natural part of market cycles. Citrus Advisors aren't predicting a major crash, but they do emphasize that it's important to be, selective and strategic with your investments.
So not a time to panic, but a time to be smart and maybe a little bit cautious.
Exactly. They believe that some sectors and companies will perform better than others in 2025, so it's not about buying anything and everything. It's about doing your research and picking your winners carefully.
Right. Makes sense. Don't just throw your money at the wall and see what sticks.
Yeah.
Now, they also pointed out that smaller companies might actually outperform the big guys in 2025. Why do they think that?
Well, they believe that smaller companies, particularly those in the mid-cap and small-cap segments, are often more agile and adaptable, in a rapidly changing environment. They also suggest that these companies might offer greater growth potential.
Okay, so higher risk, but potentially higher reward.
Exactly. Think of it this way. A big company, they're already well established, so their growth potential might be more limited. But a smaller company, especially one that's innovative and disruptive, they could have much more room to grow, and that can translate into bigger returns for investors.
So for investors who are maybe a bit more adventurous, this could be a time to look for those hidden gems.
Right, the ones that might be flying under the radar of those big institutional investors. But of course, as always, do your research, understand the risks, make sure it aligns with your investment strategy.
Right. High returns usually come with higher risks. It's all about finding that sweet spot. Okay, so before we wrap things up, there's one more trend I wanted to touch on. Citrus Advisors highlighted the rise of domestic retail investors in the Indian market.
Ah, yes, the rise of the individual investor. This is a big one.
It is. And it's something that's really changing the game in a lot of ways. So let's dive into that. What are the implications of this shift, and what does it mean for you, the individual investor?
Well, for starters, it's really interesting to see this power shift happening. For years, those big foreign institutional investors, the FIIs, they've dominated the Indian market. But now, Those domestic investors, they're stepping up, fueled by growing savings and increasing awareness of, well, the opportunities out there.
It's like democratizing investing in a
Yeah.
way. More people have access to the market than ever before. But how does that change things?
Well, for one, it means more competition for those lucrative investment opportunities, but it also means more dynamism and potential for growth. So it's a good thing overall.
Okay, so more competition, but also more opportunity.
Got it.
Got it. Now, the report mentioned something called promoter selling. And I have to admit, I'm not really sure what that means. Can you break that down for us?
Sure. Promoter selling is basically when the founders or original investors in a company, they decide to sell a portion of their shares.
Okay, so they're cashing out some of their chips, so to speak.
Yeah, you could say that. Historically, this was often seen as a negative sign, like, oh, the promoters are losing confidence in the company, maybe something's wrong. But Citrus advisors are saying that this current wave of promoter selling, it's being driven by different factors.
So what are those factors? Why are these promoters selling their shares?
Well, in a lot of cases, they're using the money to diversify their own investments, fund new ventures, or even just address some personal financial needs.
So it's not necessarily a sign of distress like it might have been in the past.
Exactly. It could actually be a good thing. It creates opportunities for other investors like you to buy into these high-quality companies.
So just because a company's founders are selling some of their shares doesn't necessarily mean it's a bad investment. That's good to know. Now, another thing the report mentioned was record fundraising through IPOs. What's driving that trend?
Well, it's simple, really. With domestic investors ready and willing to put down money in the market, companies are seeing IPOs as a very attractive way to raise capital, to fuel their growth and expansion plans.
Right, so it's a win-win. Companies get the funding they need, and investors get to be a part of that growth story. But with so much activity happening, how can investors be sure that everything is, on the up and up? Is there a risk of things getting a little bit, I don't know, out of control?
That's where regulation comes in. Citrus advisors highlight the role of SEBI, the Securities and Exchange Board of India, in keeping things stable and protecting those retail investors.
SEBI, the market watchdog, they're kind of like the referees, making sure everyone's playing by the rules.
Exactly. And they've taken some steps to, limit excessive speculation and promote transparency. They've also made it easier for retail investors to participate, through online platforms and simpler regulations.
So they're trying to strike a balance, right?
Yeah.
Encouraging more people to invest, but also making sure the market is safe and stable.
Mhm.
Okay, but what about the bigger picture here? What's driving this surge in domestic investment in the first place? What's changed in recent years to make investing more accessible and appealing to, the average person in India?
Well, one key factor is the growth of mutual funds. They offer a really convenient and relatively low-risk way for people to invest in the market. And SIPs, those systematic investment plans, have become super popular.
Ah, SIPs. I've heard of those.
Yeah, they let people invest small amounts regularly, like a little bit each month, so they can gradually build wealth over time. It's like a disciplined savings plan, but with the potential for much higher returns.
So it's like investing for the masses.
Yeah.
Makes sense. And it's not just mutual funds. The report also mentioned a surge in demat accounts.
Right. Debit accounts are those electronic accounts you need to trade stocks. And the number of those accounts in India has just skyrocketed in recent years.
Wow. So more and more people are actively trading stocks.
Exactly. It suggests that investing is becoming much more mainstream. It's not just for the wealthy elite anymore. And technology has played a big role in that, It's easier than ever to open accounts, research investments, and execute trades online, all at your fingertips.
Convenience is king. Now, one last thing before we move on. Citrus advisors mentioned the rise of passive investing. What's that all about?
Passive investing is all about investing in index funds or exchange-traded funds or ETFs that track a specific market index, like the Nifty 50.
Okay, so you're not picking individual stocks. You're just kind of riding the wave of the overall market.
Exactly. It's a set it and forget it approach. It's especially popular with younger investors, Maybe they don't have the time or the expertise to research individual companies, but they still want to participate in the market's growth potential.
It's like a low-maintenance way to invest. I like it. Okay, I think we've covered a lot of ground today. Global economic trends, specific sectors, the rise of domestic investors. My head is spinning with all this information, but in a good way. It's definitely a lot to process, but I'm feeling a lot more informed and prepared to navigate this complex world of investing in India. So, any final words of wisdom from you before we sign off?
I think the key takeaway is that, yeah, there are some really exciting opportunities out there, but it's essential to approach them with a balanced perspective, recognizing both the potential rewards and the risks. Don't get caught up in the hype or make any rash decisions.
Right. Slow and steady wins the race. Or at least it helps minimize the risk of losing your shirt. Okay, well, thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep those insightful questions coming.
Knowledge is power, especially in the world of investing.
All right, welcome back to the deep dive. We're wrapping up our exploration of India's economic outlook for 2025 with Citrus Advisors. And before we get to those big takeaways, I want to circle back to that trend we were talking about, the rise of those domestic investors in India.
Yeah, that's a big one. It's reshaping the investment landscape in India.
It is, and it's something that's, really important for anyone who's listening because it signals this shift in the market, opens up some new opportunities if you understand what's happening.
Absolutely. I mean, we're really witnessing this interesting power dynamic shift. For a long time, those big foreign institutional investors, the FIIs, they've been calling the shots in the Indian market. But now we've got all these domestic investors, people like you and me stepping up.
It's like the power is shifting to the people.
In a way, yeah. It's fueled by, growing savings, people becoming more aware of the investment opportunities out there.
And this is creating more competition for those really good investment opportunities.
It does, but it also brings more dynamism and potential for growth to the market. So it's not necessarily a bad thing.
Right. More players, more action. Now, Citrus Advisors highlighted a couple of key indicators of this trend. First, there was this surge in something called promoter selling. Now, I have to be honest, I'm not 100% sure what that means. Can you explain it in, simple terms?
Sure. Promoter selling is basically when the founders of a company or the original investors, they decide to sell some of their shares.
Okay, so they're cashing out, taking some profits off the table.
Yeah, something like that. Now, in the past, this was often seen as kind of a red flag. Investors might think, oh, the promoters are losing faith in the company. Maybe there's something wrong. But Citrus Advisors are arguing that this current wave of promoter selling, it's different. It's driven by other factors.
Like what? Why are they selling?
Well, in a lot of cases, these promoters are using the money from these sales to, diversify their own investments. Maybe they're funding new ventures or even just taking care of some personal financial needs. It's not necessarily a bad thing.
So just because the founders are selling some of their stock doesn't mean the company's in trouble or anything.
Right. It could actually be a good thing for other investors. It creates opportunities for people to buy into these high-quality companies.
That's a good point. The other thing Citrus Advisors mentioned was record fundraising through IPOs. What's driving that?
Well, with so many domestic investors eager to put their money into the market, companies are seeing IPOs as a really attractive way to raise capital, to fund their growth and expansion.
So it's like a win-win for everyone, right?
Yeah.
Companies get the funding they need, investors get to be part of that growth story.
Exactly. Now, of course, with all this activity in the market, there's always the question of, is it getting too hot? Are things getting out of control?
Right. Are we in a bubble? That's always the fear.
And that's where regulation comes in. Citrus Advisors talk about SEBI, India's securities regulator, and the role they play in ensuring market stability.
Right. SEBI, they're the ones who keep an eye on everything, make sure everyone's playing fair.
Exactly. And they've taken some steps to, limit excessive speculation, promote transparency. They've also made it easier for retail investors to participate in the market.
So they're walking that tightrope.
All right.
Encouraging more participation, but also protecting the market from volatility and manipulation.
Yeah.
Now, I want to zoom out a bit. Why are we seeing this surge in domestic investment in the first place? What's changed?
Well, one of the big drivers is the growth of mutual funds. They've made it so much easier for people to invest in the market, without having to be an expert stock picker.
And then there are those SIPs, right? The systematic investment plans.
Exactly. SIPs have become super popular. They let you invest small amounts regularly, which makes it more accessible for a lot of people.
That's like a savings plan, but for the stock market. I like it. And it's not just mutual funds. The report also highlighted that surge in demot accounts. So more people are actively trading stocks on their own.
Right. Investing is becoming mainstream in India. It's not just for the wealthy anymore. And technology has played a huge role in that. You can open an account, research investments, trade stocks, all from your phone.
It's amazing how technology is changing everything.
Yeah.
Okay, before we wrap up, I want to touch on one more thing. Passive investing.
Ah, yes, the set it and forget it approach.
Exactly. So what's the appeal of passive investing?
Well, it's all about investing in those index funds or ETFs that track a specific market index. You're not trying to pick individual stocks, you're just riding the overall market trend.
That it's less work, less stress.
Exactly. And it can be a really effective way to build wealth over the long term, especially if you believe in the overall growth potential of the Indian market. Plus, the fees are usually lower than actively managed funds.
Lower fees. I like the sound of that. Okay, so we've covered a lot of ground today. Global economic trends, specific sectors, the role of domestic investors. It's been a real deep dive, but I'm walking away with a much better understanding of what's happening in India and what to look out for in 2025.
That's what we like to hear.
So for our listener, what's the key takeaway from all of this? What should they be thinking about as they plan their investments?
Well, Citrus Advisors offer a really important reminder. While there are some incredible opportunities in India, you need to approach them with a balanced perspective.
Right, don't get blinded by the hype.
Exactly. Don't get carried away with, chasing quick returns or making risky bets. This is a time to be informed, to do your research, to think long term.
And while a lot of experts are focused on those traditional sectors, the ones that always get the headlines, the really savvy investor, they'll be looking at the convergence of trends, the things that might not seem obviously connected. Like how might that Mahakumbh event, with all those millions of people, how might that impact things like data centers and AI? Maybe there are opportunities for AI to manage crowds or personalize that pilgrim experience. It's something to think about, right? Those unexpected connections, that's where the real opportunities might lie. So we've given you a lot of information today, but remember, this is just the beginning. Keep digging, keep learning, keep asking those good questions. That's how you stay ahead of the curve.
Couldn't have said it better myself.
Thanks for joining us on The Deep Dive. Until next time, keep exploring, keep learning, and keep those insightful questions coming.